Hello everyone. Today in this video we are going to see the remaining part of asset accounting as part 3, and we are going to cover the configuration and certificate related questions. In today's video, the first topic we are going to discuss is about asset retirements. So if we see, there are two basic ways to perform asset retirements. One is scrapping and other one is selling. Both lead to asset being removed from your asset registry as opposed to assets that have been fully depreciated, which remain even with no account value. So whenever we scrap or sell the asset will be removed from our asset registry. Asset sales to customers are generally performed through financial account and not sales and distribution. This is because selling assets usually isn't a normal business activity for most companies. As in the case of the acquisition integrated with the supplier, the posting is performed through the complex posting transaction. So let us see how we are going to post an asset sale invoice. If we see the screenshot here, we are entering the revenue from fixed assets GL account and the company code, and once we enter that and give the line item amount and the tax code, we are going to click on the asset retirement button. So once we click and double click on that, we input the asset number, sub number, and the transaction type and asset value date, and whether it is a complete retirement or partial retirement. If it is a partial retirement, we can give the percentage and the quantity for retiring partially. So now let us see the theory part of it. So to post an asset sale invoice, we debit the customer and credit the general revenue from fixed asset sale account. We don't credit the asset directly with posting key 75 and a sale transaction type. The revenue account has a special configuration provided by its field status group to accommodate asset retirements. When using this account, you mark the asset retirement checkbox and the system produces a pop-up window to enter details for the asset sale. So the create asset pop-up window is here. You enter definitions for the following. We are going to enter the asset, transaction type, asset value date, and complete retirement checkbox. So if we are performing a partial retirement, you indicate the retirement amount, retirement quantity, or the percentage of the asset to be retired. The system adjusts the values accordingly, and the system will remain in the asset registry of the company with the reduced value. So this is one of the ways we retire the asset. We will post an asset sale invoice, and nowhere we provide the asset in the line item. We just click check. We will actually select the checkbox for asset retirement, then it will open a pop-up window. So from there we will give the all the asset details which we are going to retire. and asset sale line items. Now let us see how the line items for the asset sale document looks like. So it posts with the document type DR, and we can see we have an revenue from asset sale, and receivables domestic doesn't have any ledger group. These are the line items which we have entered, so it doesn't pick up any automatic ledger group. The line items which are automatically updated with the ledger group are generated automatically in the background. So it's a gain asset transaction, clear asset disposal, and this might be the depreciation of the asset. We are debiting the asset and we are crediting the asset. So when performing the asset retirement, the system calculates all related values automatically and updates all accounting principles and gain or loss accounts. You can see an example of the lines generated for an asset sale. The lines without a ledger group are the ones we manually enter during the posting, customer and revenue from asset sale. That is because the calculation depends on the values for each accounting principle, and different depreciation amounts and accounting principle specific postings need to be taken into consideration. The system will calculate the depreciation up to the asset value date indicated. So in our example, the asset was sold for $50,000. The acquisition value was $40,000. The acquisition value we have credited in the second line item, and all the depreciation up to the point of 2,500 is debited. So now what we do is credited, I guess. So we will debit that depreciation, and so we sold it for 50,000. Already we have depreciated. We have noted the depreciation for 2,500. So 12,500 is our whole profit. The revenue from the asset sale is balanced by the clearing from the asset disposal account. The posting is similar for the accounting for the other accounting principles. Only the values and ledger group will change. Note that it is impossible to have a profit in one accounting principle and loss in another, and the account is adjusted for each. You can also perform asset sales without customer integration. In this case, the transaction looks like the non-integrated asset acquisition with the addition of a tab with specifications for a partial retirement. Similar application is used for asset scrapping, except there is no customer, no revenue, which means no profit. You can also perform a partial scrapping by selecting an amount, percentage or value. The application offers facilities to perform scrapping for multiple assets. So we can do the scrapping for multiple assets, but there will not be any customer and there will not be any revenue if we are doing it for scrapping. So this is the entry. So definitely there should be an entry for gain, and we need to credit the asset, which we can see here, and there should be a customer, and there should be revenue from asset sale, clear asset disposal, and the depreciation. Now let us see what is the retirement work list. So if we see in the picture, we can see report date created on, asset balances, IFRS local currency, company code, business area, balance sheet item, balance sheet, account APC and asset class. I think this is the criteria. Based on this criteria we have generated the report. If we see here all the assets and capitalization date and all the asset descriptions and acquisition values, accumulated depreciation, book value, currency, everything was popped up. And even we can select the retirement with revenue, without revenue, or intercompany asset transfer. So let us see what is actually the retirements work list. In SAP S/4HANA offers the possibility to perform retirements using a work list, non-integrated sale or scrapping. In this case, you perform the following. Execute the report with the specific selection criteria to select the exact assets you want to retire. So create a work list for the items. You must indicate the purpose of the work list. Retirement with or without revenue. If there is revenue, distribute the revenue to the selected assets. Edit or release the work list. So even we can create work lists for retirement. So now let us see about asset transfers. How we transfer the assets between company code or within the company code. So company code, asset, transaction data. We can see here we can even select accounting principle and depreciation area. Document date, posting date, asset value date, and we are going to write the text. Transfer to the existing asset or transfer to the new asset. If it is new asset, we will give the description, asset class, cost center, and if we click on master data, we can give more details about this master data. So asset transfers are transactions that remove values from one asset and transfer the same value to the another one. There are two types of transfers supported in SAP S/4HANA. One is intra-company and other is intercompany. Let us explore both of them individually. Intra-company asset transfer is performed within a company code between two asset master records of the same or different asset classes. There are two main reasons for posting an asset transfer. The initial asset wasn't created in the right asset class. You create a new asset in the correct new asset with the correct class and transfer the values to this new asset. You want to transfer part or full value of the asset to different assets to better depict the asset components, for example, to track the location of each on the asset. So you could also use the asset transfer to settle assets under construction, but this isn't the recommended method. So intercompany transfer. An intercompany, so if we see here intercompany transfer to, so 1010 and asset, so intercompany transfer to 1710. So if we see in the before screen, so the screen is little bit different. An intercompany transfer to the new asset. An intercompany transfer represents the transfer of an asset from one company code to another within the same corporate group. The system posts a retirement for the sending company and acquisition for the receiving company code. On the corporate group levels, it is a transfer that should balance to zero in the group asset history sheet. An intercompany asset transfer within a corporate group may be necessary for one of the following reasons. The asset has moved, making it necessary to assign the asset to a new company code. Due to a reorganization at the corporate group, you must assign assets to a different company code. We have even transfer methods. If we see here, there is a net method, a gross method, net method, and new value method. The transfer method defines the way values are transferred between assets. So the gross method is the most common, in which the historic value of the assets are all transferred to the new asset. So gross methods, the sender will send 20,000 and the accumulated depreciation is 4,000. So receiver will also receive 20,000 and accumulated depreciation as 4,000. And net method and new value method. The net method transfers the net book value of the sender to the receiver. The new value method capitalizes the new asset at manually entered revenue account. In the rare case in which you are transferring an asset between company codes that are assigned to different chart of depreciation with mismatched depreciation areas, you can create cross company code depreciation areas that will map the depreciation areas between the differing chart of depreciation. The mapped depreciation areas have the same function and signifies in all chart of depreciation within a corporate group but with different keys. The cross company depreciation area is only defined by a key and description and carries no depreciation definitions of its own. So if we see the net method, the sender sends 20,000 but the receiver receives only 60,000. Accumulated depreciation is 4,000. So new value method is sender is sending 20,000 so receiver they are entering only as 15,000, accumulated depreciation as 4,000. So now we check on the low value assets. So low value assets are always completely depreciated in the year in which they are acquired. So you generally don't have to report on their values individually. Low value assets are maintained in a specific low value asset classes. In customizing, you configure the maximum value an asset can have to be considered an low value asset. This is done on the country level but can be specified on a lower level as well, and specifically per company code and depreciation area. So low value assets can be managed individually, and in this case the acquisition value for the single asset is compared to the maximum amounts defined for each depreciation area. So we can manage low value assets individually, and the acquisition value for the single asset is compared to the maximum amounts defined for each depreciation area. So alternatively, low value assets are managed collectively in accordance with the quantity posted. In this case, the value of acquisition is divided by the quantity entered, and this value is then compared to the maximum amounts. So this is the configuration screen for low value assets. We can see here we are defining or configuring the maximum low value account value based on company code and depreciation area. So assets under construction. So if we see this master data, so asset is internal number and class is 4000, which is an AUC asset class, company code. And if we see here the depreciation areas, the depreciation key is the main important factor, which is 0000. It is a 0% zero value depreciation key. So under asset under construction does not need to be under depreciation calculation. So asset under construction require a separate asset class because they must be displayed in separate accounts for the financial statements. And asset under construction doesn't post depreciation, and this is guaranteed in the system by the assigned depreciation key 0000. You can theoretically calculate depreciation for internal reporting purpose on a depreciation area that doesn't post values. Special tax depreciation and investment support can be posted to an asset under this construction. Even when an asset under construction has been fully capitalized, it's still possible to post credit memos, meaning negative acquisition and production cost values must be permitted. So few more things about AUC is when asset under construction move from the under construction phase to the useful life phase, the values are transferred to one or more final assets. So the phases, construction phase to the useful life phase. This, depending on the assets under construction asset class type, can be done either in one step summary settlement, example an intra-company asset transfer, or with the line item management. By settling line items, you have full control over which posted values are capitalized in each individual depreciation area. You must first assign a settlement profile to the company code. You then define distribution rules per expenditure and depreciation area to define what value percentage or amount goes to which final asset. You can see an example of an asset under construction with 5 separate lines. These lines for IFRS accounting principle and 2 for the local GAAP. The green traffic light is the first column, indicates the settlement rule is maintained. So green rule of settlement, we define the settlement rule. In the first column we define if it is a fixed, whether this settlement needs to be categorized as a fixed asset or as a cost center, and we are settling the receiver. So sender should be the AUC asset and we are settling the receiver. And what is the percentage? In the second column we specify the settlement receiver. In the fourth column we define the settlement percentage. You don't have to perform a full settlement of the asset values because you might continue the assets under construction project and produce other assets, or you might post the remaining value as an operating expense instead. So now moving on to the certification questions. On what basis does the system determine the period for asset retirement, asset value date or asset retirement date? Which of the following retirement types is referred to as scrapping? So partial retirement, without revenue and without customer. The answer is C. How can you perform transfer of assets between company codes with different charts of depreciation? So we configure the cross company depreciation areas in customizing. Answer is A. Which of the following are different history sheet groups that each version of asset history sheets can contain? So as acquisitions, repostings, book values at the end of the fiscal year, A, B and C. It is common for companies to receive invoices for the previous fiscal year at the beginning of the new fiscal year. So which dates must have the same fiscal year in the document entry? It should be posting date, asset value date. What are phases of AUC that are relevant to asset accounting? Under construction phase and useful life phase. You are asked to explain the asset under construction functionality in SAP S/4HANA. So what you will highlight? It is possible to post special tax depreciation and investment support for assets under construction. It is A. And it is possible to post credit memos even after assets under construction are fully capitalized. And D. A and D is the answers. How do you identify an asset as an asset under construction? So we will identify it, the asset belongs to a specific asset class. So which of the following are valid settlement receivers? Just now we see it is in fixed asset and the cost center, A and D. So with this we completed the certification questions and part 3 of asset accounting. The remaining asset accounting I will cover in the next part of the video. See you later until we meet with the video.